Oh, how's everybody doing? This is kind of an impromptu stream. Haven't done one in a few days. In St. Louis visiting the fam, but wanted to get on here. We've seen horrible market conditions over the course of the weekend. We're seeing major sell-offs. I'm going to talk about my thoughts on Kevin Warsh. This is something that spent a lot of time the last few months talking about and analyzing the different Fed choices. And this is like the one that I know I've said time and time again we didn't want for crypto. I think the market's reacting a bit, confirming that suspicion. I'm going to give my thoughts on why. There's a lot of people out there that are saying that Kevin Warsh is like really bullish for crypto. I don't think they have any idea what they're talking about, frankly. And I think it's a little hopium, maybe some copium, in fact. I'm going to kind of break down what's going on with Kevin Warsh, his views, what he's done historically, how that could impact markets, things we need to be looking out for, and what we could see out of not just crypto, but overall markets in the short term and what that means longer term as well. Needless to say, guys, like since this decision was made, you might have seen my post that I said, if Kevin Warsh is the decision, good luck for your crypto bags. Certainly, that's exactly what we saw. We've seen a major sell-off for the course of the weekend. There's a number of reasons for that. Obviously, we have more geopolitical tensions with Iran. The government shut down right now. The government's supposed to be back up and running probably Monday or Tuesday, according to betting markets, so it's not supposed to be extended out. But I believe that, Kevin Warsh is a big reason for this. And I think it's warranted, guys. Like I've been going, I talked about this at length the last few months, that he is the last one that we wanted. And I think the markets are trying to figure out why Trump chose him in a midterm year. And I think after I go through all of this, it's going to make a lot more sense. I do want to share this video. And I think there's a lot of people that are misunderstanding what he said here. And I want to play this video of Kevin Warsh. Of course, he has been nominated. He has not been confirmed. Okay, that would happen in May. He needs to first be added, as a Fed member, and then he would be confirmed as the Fed chair May 15th when Powell's term is up. Man, okay. He said lowest level, 43 to 60,000. After that goes up. I think that's fair. I don't know that we get that low, but we'll see. We'll see. At this point, though, it looks like there's further downside. I mean, that's the bottom line. Obviously, that's what conventional wisdom would suggest. But no, nothing's made sense in a while, so who knows? I need to reshare this, so I'm just sharing my tab so I can get the audio on here. But I'm also gonna give you, by the way, something that's trending right now. Actually, that's been going crazy in the markets that I have a position in. Just in full transparency, that maybe we'll see if it continues running. But man, where is this? Dang. Oh, here we go. All right, I just want to play this video, though. This is what's been circulating quite a bit. A lot of people are like, this is so bullish for crypto. Kevin Warsh is so good for crypto. And we're gonna break it all down for you guys. Some family member probably admitted killing on Poly Market. I'm sure they did, bro. God, so ridiculous. All right, I'm gonna play this, and then we'll break down what it all means. Okay.
You made reference to Bitcoin, and I thought I heard a little bit of condescension that people are buying Bitcoin and these things.
But doesn't it? Charlie Munger, this is 2 or 3 years before he died, Charlie Munger attacked Bitcoin. He called it evil, in part because it would begin to undermine the Fed's ability to manage the economy.
Or it could provide market discipline, or it could tell the world that things need to be fixed.
Bitcoin does not make you nervous.
Bitcoin does not make me nervous. I can hearken back to a dinner I had here in 2011 with someone who is another guest on your show. I won't say his name. Okay, I just did Mark Andreessen, who showed me the white paper. That was the original white paper. I wish I had understood as clearly as he did how transformative Bitcoin and this new technology would be. Bitcoin doesn't trouble me. I think of it as an important asset that can help inform policymakers when they're doing things right and wrong.
That part is
It is
key.
not a substitute to the dollar. I think it can often be a very good policeman for policy.
Mhm.
And if I were to speak more broadly to what did Charlie Munger and others perhaps have in mind, there is a proliferation of securities that go under all sorts of names. Many, if not most of them, are not worth what there might be being traded for. So what did Charlie say, and maybe his pal Warren say? There's the innovators, the imitators, and the incompetents. They're real innovators that are happening in and around that new technology. And what I would try to impart towards businesses and bankers is that the underlying technology that Mark showed me in that white paper, or tried to show me in that white paper, it's just software. It's just the newest, coolest software that will provide us an ability to do things that we could never have done before. Can the software be used for good and evil? Yes, both, like all software.
Right.
So I don't cast aspersions like that. If there's a final point, it's these technologies are being built here. I don't just mean on Stanford campus. I believe in the United States. And the world's most talented engineers from China and Europe and everywhere, they come to the United States even now to try to build this stuff. And my view is by building it here, that gives us an opportunity to be more productive and create something very special over the next decade.
Okay. All right. So there's a lot of people that are clinging on to parts of this, the parts that they're saying, oh, he's not afraid of Bitcoin. Okay. There's also stuff going around like claiming that he holds Bitcoin and Ethereum. You might have seen these posts. Guys, I can't confirm this at all. I've looked at Arkham. I believe that's, and maybe I'm wrong. If you have proof of this, please send it to me. But I think someone made this. I don't think this is actually true. Okay. And even if it was, here's what people need to realize with the statements he made. And I did a lot of research on Warsh. I looked back at his full history over the last few months, and the big reason why I did not want him to be chosen. Guys, his whole stance here is it's a way to gauge whether or not you have proper policy. In other words, if the price of Bitcoin is going up, that means that the fiscal policy is wrong. That means the dollar is being devalued, that we're being too loose with policy. I assume that he intends to do a good job by his own measure, which would mean that if the price of Bitcoin is going up, he would be giving himself a bad grade. So to me, I don't understand how people don't get this. I don't understand how people take what he said there and they're like, this is really good for Bitcoin. It doesn't make any sense. So let's break down a little bit about his views on Bitcoin, on crypto in general. And something he said at the end of that statement there, and in that video was, yes, we're going to attract people to build real things, and it'll be really good over the next decade. That's good. And I think that, long term, he could be a good thing. But short term, guys, I think it's actually horrible. Absolutely horrible. Unless, and I think this is where the market's confused, unless he's just bullshitting here and ends up doing something completely different than what he's been made us lead to believe he stands for the last 10 years, which I have a hard time believing. But I think that's why the markets are so confused right now, because this choice makes zero sense in a midterm year. For Trump to have made this decision makes zero sense. So let's just break down a little bit about his history here with crypto. Some things that I find very alarming, in fact. So as recent as 2022, he did argue that many private crypto projects are fraudulent and worthless, which is true. Okay. But he also was a huge supporter of CBDCs, which is like shocking to me because obviously Trump's very anti-CBDC. He was very much against stablecoins. And obviously, for us in crypto, like you should be very anti-CBDC, guys. So I would say he has not been very supportive about crypto in general. But the main thing about his policy is his view on liquidity, y'all. And this is the big thing we need to wrap our heads around. What we've seen, a big reason, even in the big print, right? That I've read so many macro books for the last year, and just understanding the history of money printing and what happened since 2008. A big reason why Bitcoin's done so well is because all these central banks are printing so much money. Okay, and even in that book, he said, look, unless there's a huge change in policy, in fiscal policy, Bitcoin's going to go absolutely parabolic, and the big print's going to take place. Warsh is essentially and effectively looking to change policy in a major way where we could have a massive amount of short-term pain, some huge sell-offs in markets for the benefit of the longer term. And again, this is why this midterm, someone just said midterm policy. This is why a lot of this doesn't make sense. And I'm gonna break this down here in my thoughts and all of this. Okay. So number one, I think it's important to understand, like, we have a tremendous amount of debt. I think everyone understands that. We spend roughly $7 trillion a year. We're bringing in, say, $5 trillion a year. So every year we're adding an additional $2 trillion to our deficit. Now, the way that we finance that is through selling treasuries. Okay, some on the short term would be treasury bills, anywhere from a year or less, all the way up to longer term would be treasury bonds, right? So that is your 30 years, your 20 years. And essentially people will buy these and we promise to give them a return on their money. Now, I want to break down the different buyers of our treasuries to kind of give you an idea of the breakdown here. We have foreign investors, and there's been a lot of talk about that recently, $9.27 trillion. These are generally other countries. And there's been all this talk recently about countries selling off our debt. Really only China has been the only country. Most of other countries have been increasing their purchase of our debt, but $9.27 trillion is a 33% of our outstanding debt to finance our spending is through foreign investors, right? The second largest is the Fed Reserve, and this is a key part, at $3.83 trillion. Essentially, this is us, Treasury printing money and buying up our own debt. This is where Kevin Warsh wants to decrease that. He wants to vastly decrease this bucket here. I'm going to show you the Fed balance sheet and how that's coincided with crypto and what that means for markets. You have money market funds, you have households, individuals that are buying up our debt as well, because it's looked at as a safe haven, right? You can feel pretty confident if you buy treasuries that you're going to get paid on that, unless the government were to default, which is very unlikely considering they can print money, right? Mutual funds, state and local governments, you have insurance companies. I mean, the list goes on and on. Obviously, you have companies too, like Berkshire Hathaway, right? With Warren Buffett's a huge holder of our debt. So, sorry, somebody just got home. So, if we don't have, well, just think about this for a second, right? A big bet, if you're willing to say buy, type your money for 30 years, buy a 30-year treasury, let's say it yields 5%, you have to consider the impact of inflation. So your return on that money annually, you'd want it to outpace inflation. So the more printing the government does, the less likely people are going to be encouraged to buy your debt, right? If they see that your debt is getting out of control, they're going to expect that there's going to be inflation because you're going to have to continue printing money to finance a part of that debt. Kevin Warsh, his view is essentially rein in spending, okay, rein in fiscal policy, and at the same time reduce the balance sheet. Okay, so this is that second largest holder, right? The Federal Reserve. This is our balance sheet. You'll see back in 2008, right here, when this increases, that means we're printing money to buy up our own treasuries. We're essentially financing our own debt by printing money. We had to step in at different times to do this. He was actually a Fed member. Warsh was back in this period right here when we started what's called quantitative easing for the first time ever, following the 2008 financial crisis. Back in 2008 and forward, we started printing money and buying up our own long-term treasuries. Again, obviously, we saw this massively in around COVID. Okay. Generally speaking, when we inject that liquidity into the markets, that's why risk on assets have done so well. On one end, it causes inflation, which is bad, obviously. People feel that in their everyday lives when they go out to the grocery store, et cetera. The other end of it that people don't talk about enough is that it creates asset bubbles. That's why we've seen housing values go up so much. That's why we've seen the stock market go crazy. That's why all this money sloshing around. That's why in 2020 and 2021, into 2022, we saw all that money flow into crypto. It was like NFTs, meme coins, all this BS that comes with it. But it's very good for risk on assets. That's why we've seen less risk appetite, because over the last few years, after they injected all that money, they started to decrease our holdings and tighten up monetary policy. This is what Warsh wants to continue. He wants to continue reducing our holdings, so tightening up monetary policy. And really, it is a good thing in the long term. It is, when you look at, talk about Main Street versus Wall Street. Main Street is your normal everyday people that don't own assets, that are living paycheck to paycheck. This increase where they push all this money into the economy, that's why the rich keep getting richer. Okay, that's why you see this wealth gap getting bigger and bigger. When you start restricting this, that starts to close that gap a little bit. It doesn't create the asset bubbles that we've seen, but it also could mean a lot of pain in the short term. It could mean massive sell-offs in the markets. It could mean it should bring inflation down, but it also means that crypto could get hit really hard, guys. Let's be real. And here's why it's so interesting to me in a midterm year, because it's a lose-lose situation. It's going to take time for this to play out, if this is really what he intends to do, by reducing printing and spending and reining in monetary policy. Most people out there don't understand macro at all. Okay, so this vision, while I think it will be good for the normal everyday American, it's going to take a lot of time for this to play out. And in the short term, it could mean markets really crash if, again, he follows through with his policy. That is there's no way to win, because most people aren't going to understand. They're going to see the headlines of market crashes. They're going to assume this is just really bad for the overall economy. And it could be, frankly. And I just don't understand. That's why I think the markets are having a hard time wrapping their head around this decision, because in a midterm year, while this could be good in the longer term, guys, this is absolutely going to seal the fate of the midterms. There's no way, if he follows through with his thesis and what he said he's going to do, there's going to be a lot of short-term pain. That's why I think the market's trying to understand, okay, is he actually going to do what he says he's going to do? Or, have him and Besson and Trump had the discussion that actually he just needs, because he needs to get, not just nominated, but pushed into this role and approved. Are they just saying this, and then all of a sudden he's going to flip on everything that he's stood for in the past? Because even going back to here, and this is really important because people have been talking about this. After 2008, after the financial crisis, Ben Bernanke, they call him Helicopter Ben, he started the QE, right, for the first time. This is something that didn't exist before, where we started printing and buying up our debt. In the first go around, Warsh was in favor of it. Now, they continued it. He was very against the prolonged QE. Now, he didn't dissent. Okay, so when the Fed makes decisions, the members vote on, and they put their votes in as to whether they agree with that decision or not. Historically, most of the time, all the Fed members agree. And the general public has no freaking clue what they're deciding a lot of the Fed, chairs will come out and make statements that are sound overcomplicated, and the general public just, if everyone agrees, they're like, well, they're doing the right thing. Every once in a while, you'll get Fed members that will dissent, right? That will come out and say we voted against the Fed chair's decision, and this is like happens 8 times a year. We saw this several times under Powell recently, where he cut rates by 0.25%. We had members that dissented that wanted more aggressive cuts. Warsh back here, he didn't dissent ever. So he agreed with Ben Bernanke in continuing QE, but it's come out now that, after the fact, that privately he was very, very against prolonged QE. And he didn't vote, while he didn't dissent, he was against it. And that is where he's come out recently and said, hey, we're very against increasing the balance sheet again, the money printing. We want to continue decreasing this bucket. And over time, by doing so, we'll restore confidence in the US dollar. And if we go back to here, we can reduce this bucket here. The Federal Reserve will hold less and less of our debt. We'll rein in spending. And by doing so, people will be less worried about long-term inflation risk. And foreign investors and all these other buckets will increase their buying of our debt. Keep in mind, we just passed the Stablecoin Act. This is a whole new bucket of buyers. These stablecoin issuers will also be buyers of our debt. You have banking deregulation, which is going to allow our banks to hold more of our debt. But that's the bet he's making here, and that's what he wants to do, is reduce the balance sheet. So we are printing less and putting less money into the system. And, again, giving, restored faith in the dollar, so other entities will continue buying up our debt while we reduce spending. In theory, it sounds great. In the long term, I think, it could be a good thing. But what does this mean for markets? Well, guys, the whole reason why the stock market's been hitting all-time highs since 2008, the reason why crypto's done so well and asset prices have gone up so much in general is because of the fiscal policy we've had. What would I expect? Well, we're starting to see it a bit, and these are the things to keep an eye on. How are the markets reading this? Are they going to call him on his bluff and think, okay, he's full of shit, this is what he says he's going to do? Is he actually going to do something different? Or is he going to follow through? And DXY is a good thing to keep an eye on here. This is the US dollar against other currencies. If all of a sudden we stop our crazy spending, the dollar should gain strength against other currencies. We're already seeing this right here. So this is against a bucket of other currencies. The most heavily weighted is the euro. We saw this really start to drop off. And then as soon as he announced Warsh, all of a sudden we started seeing this tick up. Good for the US dollar strength, bad, very bad for risk on assets like crypto, very bad for risk on, risky plays in the stock market, your small caps, etc. So if this continues to tick up, which I would expect it probably will, that would mean the market's expecting him to be more of a hawk. Again, that would mean that he's really looking at inflation. He's not going to be loosening up fiscal policy as far as printing money. Also means that he might be less likely to lower rates, the Fed rate. So if we continue to see this tick up, that's not really good for crypto, okay, at all, for that matter. The other thing to pay attention to is the Russell 2000. These are your small caps, okay? So this is a very good measure of risk, tolerance or risk appetite in the markets. We'd seen this hitting new all-time highs. We're now seeing this start to tick down. If we continue to see this sell off, which I would not be surprised at all, another really bad sign, especially for altcoins, guys. And again, I think this is a reaction from Warsh. One of the most obvious plays, and I completely missed it on Friday, we saw the precious metal sell off. People were flooding into precious metals, gold and silver, because they're losing faith in fiat. They're losing faith in the US dollar amongst other currencies. Well, Warsh is obviously his views are to very much change the path that we've been on. Again, reinstilling faith in the U.S. dollar, reining in spending. I think we already saw gold and silver were very overbought to begin with, very euphoric. I think everyone was looking for a reason to sell off. Warsh was I mean, it was the most obvious short opportunity ever, because obviously that decision was announced early Friday morning. There's rumors Thursday night. I think the precious metals were looking for a reason to sell off. There's other things in play there too, where certain banks maybe didn't have as much physical silver as the paper contracts and reasons for them to want to push the price down. But I believe that the Warsh announcement was certainly that fuse that was lit for the most obvious short opportunity ever for gold and silver. And we saw, obviously, I think it was like $12 trillion sell-off, something absurd on Friday. Very obvious. The other thing to keep an eye on here is going to be the 30-year Treasury. Do yields go up or down? I think this is going to be a really good indicator of how the market is baking in, what they're expecting, whether or not he's going to follow through with this plan of really tightening up fiscal policy or not. And then the other thing is, looking at poly markets, how many cuts are we expecting in 2026? I mean, so there are two different levers here. I mean, he can lower the Fed rate while also reining in spending. But right now, I mean, we haven't seen a huge shift here, but we are starting to see, the expectation of less rate cuts this year, than if we had seen like a Waller or a Hassett or one of those guys. Those guys would have cut rates a lot more aggressively. So I think right now, I think the market is trying to digest all of this. And I think the big question, and of course, uncertainty is really bad for markets, man. Like, we've had a lot of that in the last year. The market's trying to understand, should we call his bluff, or is he really going to follow through with this? And I think, to me, it's really a question of, did Scott Bessent convince Trump to choose Warsh, and Trump didn't really understand and just trusted Bessent? Or did they have discussions with Warsh that he basically was like, hey, I'm going to keep firm on what I'm saying here to make sure that I don't get blocked. And as soon as I'm in there, I'm going to continue the loose fiscal policy that you want. And I think the market is trying to understand that and trying to figure this part out. But I have to say, based on his voting record, his statements over the last 15 years, I have a hard time believing that all of a sudden he's just going to change. And to me, this is not a good thing in the short term at all for risk on markets, for crypto. And that's why I've covered it so much. And I've said so many times, the person he announces is going to have probably very likely a big reaction from markets. And that's exactly what we've seen, guys. We've seen this over the course of the weekend. Tomorrow morning is going to be very interesting to see how markets react. Do we continue to see DXY move up? And do we continue to see a sell-off in the Russell 2000? And I think we could see, further downside in crypto as well. Not to say we can't have a bounce. And things on the horizon, like what could we, I mean, things are so oversold right now. And I think markets reacted very aggressively to this news. And again, I opened this up in case you weren't here at the beginning. Like, there's other things in play too, to add to it. You have the Iran situation. You've got the government shut down right now. A bank failed in Chicago on Friday, right after the markets closed. The first bank failure in a year and a half. So there's a lot of things going on top of this. Now, could we see a short-term bounce? Sure. And hopefully I'm wrong in all this. Hopefully the market's like, calls them on the bluff, and it's like, all right, let's move into crypto again. I just have a hard time believing it. And again, going back to his statement, I don't understand why these people are like, oh, he said that he's not afraid of Bitcoin. That's such a bullish case for Bitcoin. No. His statement was, if we continue on the path where we're recklessly spending and printing, if the price of Bitcoin goes up, that means that I'm not doing my job well, guys. Like that's what he said. So I don't understand how you can make a bullish case out of that at all, frankly. And I just don't see how this is good. for Trump in the midterms either. I think he's going to lose his ass. I don't know if y'all saw, like, there was an election that was held in Texas, and there's an area that Trump had won by 17 points. They just elected a Democrat in an area that Trump had just won by 17 points. It's like the first time in 30 years. We saw something similar in Florida. I just don't see a path. And I think that's why the markets are so confused by this choice, because short term, it does not look good at all. So hopefully that gives you a little bit of a background about my view on this decision. Hopefully he's bluffing. Hopefully that is not what happens, and things end up working out. Now, longer term, Clarity Act gets passed. We have the Genius Act, the stablecoin bill. I think this paves the way longer term for crypto to do quite well. I think you'll see a lot less fluff. I think a lot of the projects get washed out. Actually, this is important. Then I'm going to give you something I've been playing last night, just a narrative that flipped last night and made some pretty good money that I think is an interesting one to keep your eyes on. So short term, I don't see it being a good thing. Longer term, yeah. So I think something that we need to keep in mind here, the Clarity Act is good. We want that, right? That's going to solidify, give us clarity on what's a security, what's a commodity. It's going to allow capital to flow in the longer term. It's not something that, like, it gets passed and everything changes immediately. Same with the Genius Act, like the Stablecoin Act. It's a good headline. It's going to pave the way down the road, but it's not something that I would expect to have, like, maybe a bounce, but not something that's going to be like game changing tomorrow. So he mentioned at the end of that video, Warsh, like, we want to bring the builders here. It's going to be good over the next decade. So, I think we need to start thinking about this as long-term versus short-term. Short-term, bad, in my opinion. Long-term, I think it's good. I think, the real projects that we focus on could do quite well. But if you're looking, and this is how I'm looking at my investments right now, like, we're going to see a lot of stuff get washed out, in my opinion. We're already starting to see rumors. You need to start looking at which projects have the runway, which projects have raised capital recently, and which ones have revenue. When you start, because I've worked in the startup space, these projects are all burning capital to run. How much revenue are they bringing in? I'll use an example here that's a really good example. They've got a couple of contracts they're expecting to come in by summer, and Nils has been vocal about this. It would bring in more revenue than their burn rate. In other words, they can self-sustain off of the revenue coming into the project. So if we go through an extended down period, they can continue to run operations and make it through a trying time. There's a lot of projects that hit their all-time highs in 2019, 2020, 2021. You think about this, I just showed the Fed balance sheet, all the money injected in the economy, rates were super low. It was the perfect environment. People were throwing money at everything. A lot of those burned through that money. A lot of these older projects, they're not going to make it, y'all. If they're not bringing in revenue, it's become a lot harder for them to raise capital to keep their operations going. That money, that speculative capital has been drying up for some time. I think you're going to see even some of the bigger layer ones, some of these projects that aren't getting utilization, guys. I wouldn't want to be holding those. So I think it's really, really important to keep an eye on, which projects have the capital, have the revenue coming in, can make it through these times. And if that's a question at all, I'm not interested in holding. So, so like looking at Silencia, their prices in the dumps right now, like everything else. They're bringing in millions of dollars based off, the audio they're submitting to these AI companies. Like, I would say they very likely have more than enough capital to exceed their burn rate, so they can continue going. 375 AI in the dumps right now. they raised 10 million in capital. Their founders and co-founders all have deep pockets. No concern over them making it through these times, right? GeoNet's another one, a good amount of revenue coming in the door. They raised a lot of capital recently. They should be absolutely fine. But start thinking about projects that aren't in that position. I don't know that I want to be holding those right now. Full stop. You know, it is a major concern, and this can be, you know, you start seeing headlines of some of these bigger projects get washed out. That is not good for the space necessarily. So, you know, if this is money that you're, you know, certainly we could see a bounce. We could see things move up in the shorter term, but I think you need to be looking at this as, okay, are these positions I can afford to hang on to for the longer term, making sure that they have runway to make it through. And some of the ones I just mentioned, I think when the market does rebound, will do quite well. But as far as when that happens with this Warsh appointment, it has changed my thesis a bit in my outlook on things as far as what's possible in the short term. So those are my views, guys, and that's my main takeaway for now. I know it's not like the most exciting thing, but that's just what it is. Let's see here. Let me show you one thing that I've been playing, and then I gotta go to my niece's birthday party. I hate to bring these things up because I feel like every time I do, they just like die. The more risky stuff. But there's something that like I've been messing around with the last 24 hours at least. That I think there's some opportunities. And you know, I have not a huge bag, but a decent sized bag in. So you guys have probably seen all the AI agents, and these different, you know, the Reddit forum where they're, you know, creating threads and communicating with each other. This is an AI agent launchpad where they're actually launching protocols, the AI agents, so automated. It's all automated. Super interesting. And there was some people, if you remember virtuals a year ago, that went absolutely parabolic. Obviously, very different market conditions too. There are some people that did really, really well on virtuals that are very much into Claunch. So again, I have a position in this. And if you look right now, let's see, it got up to all the way up to a 40 million market cap, and it is holding right around 16 million. Again, very high risk, guys, but this is something that, if you remember what happened with virtuals a year ago, went absolutely nuts a little bit over a year ago. The AI agent thing is the one thing that's actually trending where we're seeing capital flow into in crypto right now. So you can't ignore it. Just know though that like, hey, we don't know exactly where this is going to end up going. Actually, if we refresh this, went from a 12 to $16 million market cap since I started. So again, this is something I think could move. It's on base. If you look at, here's the platform. So it is, AI agents are launching their own projects. It's actually crazy. So Claunch is the protocol. And then one in particular that launched on Claunch is Claudic, which is a prediction market for AI agents. Freaking wild, man. So this one in particular, it's a net, well, it went from 1 million to, let's see, now at 1.24 million since I started here. Last night got up to like 4 million market cap. So a couple that I have speculative, you know, small bags in, but just paying attention to the trends, man, because everything else has been super boring, super choppy. Things aren't looking fantastic short term, but something to keep an eye on at least. So I wanted to bring it to your attention because I like to be transparent about where I have positions. Other than that, guys, like short-term opportunities, maybe Clarity Act passes. I think we could see a bounce from that. Things are super oversold, so it would make sense to see a bounce from there. But I just have to think, I mean, you're looking at the charts, looking at all the things that are happening right now, it seems more and more likely that we see downside versus upside, at least for, you know, sustainable upside versus downside. I think you have to bet on more downside and kind of weather the storm and be patient. And that's kind of how I'm looking at things right now. wish I had better news for you guys, but I got to be real. And that is, again, why we've seen such a sell-off, in my opinion. Like, I don't think the market's like Warsh. Like, I don't think that's a secret. This is something that, I covered and said so many times over the last few months. Like, if he is selected, that it doesn't make any sense. Oh, gosh, we'll see how it plays out. Man, there's a lot of comments in here. Wing bits, TGE, I don't know. Guys, a lot of these projects that delayed their TGE, all of them say it's not because of market conditions. Bullshit. Like, but if you put in all this work, would you want to launch in these conditions? Look what happened to 375 AI. Like, they did a great job, in my opinion, on executing all the way through. They're installing their cameras all over. Like, if you look at their X page, they're installing cameras everywhere. They have get a stacked team, and look at their price action. Absolutely abysmal. Market conditions, these are the worst we've ever seen, really. I mean, we have 4 straight months of just bleeding out. We haven't seen this in like 6 or 7 years. It's just disgusting. And, for these projects that have delayed their TGE, of course it's market conditions. They can say whatever they want. They try to say something else, like it's BS. And I don't blame them, really. But the big question for me is like, okay, I mean, if you're waiting for the perfect market conditions, when is that going to happen? Are you ever going to have your TGE? Because it doesn't look great right now. Let's be real. Let's see here. Oh, Julie was in here. I don't know if you're still here. Hi, Julie. Yeah, I mean, look, here's the deal. You're talking about Warsh. Even if he does have Bitcoin, that it doesn't mean that he's all of a sudden like going to go in there and try to pump his bags, guys. Like, maybe you have to think he disagreed with QE, the second round of QE under Helicopter Ben, and then you look at what happened, more recently after COVID with the money printing. He probably was very against that. So for him, like, he wasn't in a position to control or change that. So he was probably looking to hedge against the US dollar himself too. So just because he bought Bitcoin, now that he's in this position, that doesn't mean that's like bullish. Like, you think he's all of a sudden gonna be like, oh man, I'm gonna pump my $700,000 and like, that's like the most ridiculous thing ever to even think that he's gonna change his policy because of his like personal crypto bag. That's hopium, guys. That's crazy to me. Again, here, I mean, I hate to make predictions, but what we saw in the last market cycle was that Bitcoin hit the all-time high from the prior market cycle. That would put us in the upper 60s. And we saw less upside this time. And over time, we're going to see more, less and less volatility. So I think less upside, less downside. I would be shocked to see us get that low, but not out of the realm of possibilities. I'd be surprised, though. Let's see, what else we got? Some interesting comments in here about things that I wasn't talking about. So, Wingbit's potential, certainly. I like Wingbits. There's other deep projects out there that I think there's another one that's doing flight tracking as well. You think 30 to 60K? I mean, I think you have to assume then that like Saylor's going to start selling. I don't think he will. I know everyone's like, this is break-even price. If he drops below, he's going to start selling. He's announced he's buying more today. So I don't think that's the case, guys. But maybe, I mean, I think there is a case to be made. Like, the people that came in last that bought through the spot ETFs will probably be the first to sell. They're going to be like, screw this, I'm out. So maybe. That seems a little low to me, but I don't know. Again, my bet would be like upper 60s, and then I think we'd bottom out there. But if we haven't already, we'll see. But I don't expect like some major surge to all-time highs like in the immediate future. I think people are going to kind of wait and see what's going to happen with Warsh. Ooh, this is a great question. I think looking at investments, if we're going more risk off and we're seeing, the fiscal tightening from monetary policy, which is what Warsh wants to do. Again, I think long term it's good. I think like from you talk about Main Street, I think it's good for the average person if he can. His deal is rein in inflation, stop printing all this money to create these asset bubbles. Stop widening the wealth gap. Long term, I think is good. Short term, I think there's pain. Now, the copper thing is interesting because generally speaking, when you see economic booms, that's when copper does well. And if we see a lot of short-term pain, that could restrict growth potentially. But the AI data centers, we have to keep in mind, guys, and this is the thing that's held up our GDP. It's where all the capital has been invested. We need the power. We need the electricity to turn these freaking things on. So I think personally, the energy play is and utilities also, when in times of trouble, people tend to turn to energy stocks. So to me, it seems like a really good thesis overall. The AI data center play, if we see some short-term pain, I think looking at nuclear, which I've talked about this stuff for like a year, guys, but like nuclear, solar, natural gas, I think is going to be where we see a lot of the electrical build out. And then building out the infrastructure, copper, we're going to have major shortages there. And as a backup, substitute is aluminum. So, to me, not to say that you could see sell-offs just based off people, worried about growth, but like, I think, those are all really good plays for the AI data center build out. All this money that's been invested in the AI data centers, the whole belief behind that is like, A, these things are going to get turned on, and B, they're going to be able to create value. If all of a sudden that gets crushed, then we're going to see freaking crazy sell-off and recession, man. Like, we've got to get these things powered on. And I bet we're going to have, Trump's already talked about it, there's probably going to be executive orders on ways to speed up the building out of our electrical infrastructure. As those announcements come, all of those things I just mentioned should go freaking nuts. Okay. So if we see a little bit of a sell-off, I'm looking at that as buying opportunities there. So, my TradFi investment has done quite well. Crypto's been obviously brutal, guys, but there's opportunities everywhere. And you just got to find them. Anakoi. It's basically a GeoNet, right? I think the RTK networks are going to do really well, especially as we have robotics, autonomous vehicles, drones. There's going to be a major use case for RTK networks. Now, is there enough market for both? I'm sure there is, but I would personally mean GeoNet because GeoNet has been around longer. They have far more revenue. And really, it's not like they're that much more expensive from a market cap standpoint than Anakoi. So I think they're both great projects, but for me, I would be more inclined to go for GeoNet, which obviously I have over Anakoi, but not to detract from what Anakoi is doing. In my opinion, look at 40 Sky. It's 40 Sky, so that's another flight tracking network. I mean, you got to think there's going to be a lot more drone usage, and both networks, I believe, will be able to track drones. This can be a big thing. And then now that we have AI insights that you can drive from the data, I think that the data is going to be a lot more valuable. Keep in mind, this is the other thing that people need to realize, though. There's other flight tracking networks out there that have done a deep in approach, basically flight enthusiasts setting these things up. The whole bet that Wingbits and these other projects are making is that by giving them tokens, they're going to be incentivized to create better setups and get better data with more uptime, optimized setups. That's the bet they're making, is that they can create a network that gets more valuable data, like better data, and that at the end of the day, these entities are willing to pay more for that data. So if you believe that, then I think there's a major business case to be made there. But if these, Web 2 companies don't see the difference in the data, and I don't know. I think that's the bet you're making there. Amazon is pushing regulatory change to make. Yeah, the drones are going to be any reliable source on what? Which part? I don't know what you're asking about there. Let me know. Am I an insider or what? High average earnings. Oh, brother, not looking great. Tokens in the dumps, guys. And I don't know. That's a brutal one. They're dealing with the same thing as helium. They're doing a good job of building out a product. They're doing a good job of getting customers. The tokenomics were structured too similarly to helium, where there's way too much dilution up front, in my opinion. That's the hard part. They've got to overcome that. I don't know, what that means. Buying robotics, but buying and creating. Huh, that's interesting. I'd like to know more about that, unless you don't want to tell us. You don't want competition. Amazon. Oh, drone delivery. Yeah, drone delivery is going to be huge. NATO is polarizing brand. What do you mean NATO? I mean, I don't know what you mean by polarizing branding. By that. Oh, partners with NATO, regulatory risk on site for some non-NATO countries. Huh. I'll just say one thing that's interesting about the drone space is so 40 Sky is a NATO contract. Huh. That's something I haven't looked too much into 40 Sky, but that's interesting. I think that one of these flight tracking networks is going to do well. I think there's a market there. And with the emergence of drones, I mean, it's going to be massive. And speaking with my coordinate GeoNet, that's a huge emphasis for them. They're also manufacturing drones because the U.S. is basically cutting off drones from China and some of these other countries. Like the biggest drone manufacturer, oh man, I'm drawing a blank. I even have one of their drones, the Mavic 2 Pro, DJI. DJI is the biggest drone manufacturer. And I used to work in the drone space. That's a Chinese drone. So the U.S. is going to majorly restrict that. So there's a huge opportunity for GeoNet there, guys. So I've been talking to Mike quite a bit about that. But I remember when we'd have our DJI drones. Anytime we would do an update, all of a sudden it'd start, because there's there's settings in there you could turn off, so it wasn't sending data back to China. Every time you do an update to the software, it would turn that back on again, and they'd sneakily be taking data again. So it is national security risk for sure. So I get it. I get it. But yeah, I have a Mavic 2 Pro. We used to use the Matrice, and some really big commercial drones are pretty cool. So that's something that's going to be huge. I mean, the RTK network, especially, think about this. Now that GeoNet's going to be creating this drone, it's going to have RTK and GeoNet compatibility built into it. And now there's going to be a huge market for them to capture, because DJI is going to be cut off. Guys, GeoNet is going to be a monster, in my opinion. I think people are really sleeping on how much upside there is there. So, whew. Hopefully you guys like this stream. I don't know if you guys have any other questions, but find your conviction plays. Be patient, though. There's a lot of uncertainty at the moment, and Warsh, he could potentially walk back his nomination of Warsh. They were asking him about it, actually. He's like, well, I can't tell him what to do with rates, but I think he's going to drop rates. And then he was joking. He's like, and if he doesn't, maybe I'll just sue him. And it's it's seeming to me like Bessent was like, hey, because Bessent and him had the same boss in the past. So him and Bessent are very close, Warsh and Bessent. It seems almost to me like hasn't convinced Trump. And now that the markets are starting to sell off, I could see Trump be like, I don't know if this is the right decision. I don't know if this was the right call. He could change his mind. You never know. Let's pray for our bags, though, in the meantime. Anyway, pay attention to this Quanch, guys. I'm telling y'all, this stuff's going kind of crazy. If we do see some, it's back up over 20 million again. Since I started this stream, it went from 12 million to 20 million market cap in the last hour. And this is something that, if you remember, Quanch, if you look at virtuals, went to a multi-billion-dollar market cap. I'm not saying totally different market conditions, not saying it's going to get there, but I do think it's worth paying attention to that. And if you see any massive dips, a consideration. It says GeoNet has held its own lately. It has held its own lately. I'm saying, like, and I've said this before, like, it is decoupling, guys. It's unlike all the other deep end charts. It's moved differently than Bitcoin and the rest of the crypto market in many occasions. I think it's decoupling. And then you look at their revenue growth. They hit 8 million last year. They're projected to hit as much as 20 million this year. I need to go freaking work with Mike in a sales role and get that revenue up even more. Work for my bags, baby. I actually have a lot of pertinent work experience, actually. That would translate pretty well. Let's see. Does GeoNet propose a 50% on the RTQ side? I mean, the $40 if you get 10 clients or more. I'm not sure what you mean by that. Yeah, I'm not sure what you mean by that. Oh, like if I bring on clients to GeoNet? I don't know. It's a good question as to what that split would look like. Or do you mean if I I think I have a I'm so bad about sharing my referral codes. People ask me all the time. I'm so bad about that. I don't know if you mean if like hardware, a Quanch up to 22 million. Guys, telling you, this could be, it is risky, but it could be one of those things that moves kind of crazy. It hit 40 million last night. And there's some whales that have been posting about it. And I have a decent bag. Let's just put it that way. All right, y'all. That's what I got for you. Appreciate each and every one of you guys. If you could share it on X, make sure to like. If you're on YouTube, if you haven't subscribed to my channel, by the way. Boom. Hell yeah. Guys, long-term things look really, really good. Okay, I'll say that much. And I think for real projects, things look really good. It's just a little disheartening what we've seen over the last year. Pump fund took a lot of liquidity out, and then the wind really got taken out of the sails with the Trump meme coins, and then the Argentina meme coin, I think, wrecked retail. Then it was all institutional bidding in 2025. And then 1010 happened and really destroyed trust. And then this Warsh appointment on top of like all the uncertainty constantly. It's just been a really tough time, but I do feel very confident about being in the real legitimate projects. Some real shit being built, guys. So, longer term, I think those would do really, really well, but we're gonna have to like ride the wave a little bit now, which kind of sucks. That's true. It's very true, man. Guys, dig in, dial in, be doing the research, and be ready. When things start shifting, even if you're not in the market right now, maybe you're just like kind of taking a wait and see approach. When you start to see sentiment shift and things move in the opposite direction, know which bags you want to get into, because those are the ones that freaking move, and they're gonna move quickly. You look back historically speaking, it happens fast. Okay, so at least be doing the research and know what your eyes are on. Look at this thing moving up to 22 million. Whew. Guys, I need to increase my bag, I think. Such a degenerate. All right, y'all. Have a fantastic weekend. We'll see y'all next time.